the everything bubble has popped, except gold and silver really haven't been in the bubble at all. They're both very undervalued. But in any of these big sell-offs of the stock market, the metals get hammered right along with it. I don't know if we're going to be able to say this is the bottom, Elijah. In fact, kind of doubt it. I don't know where the bottom is exactly. I know we're certainly close enough to begin to get into the metals. In other words, I wouldn't be afraid to buy here, but I wouldn't load up. I would start to what we call nibble.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the silver guru, one of the top silver experts from the morganreports.com. David, thank you so much for joining us today.
Elijah, it's always a pleasure. Thank you.
Well, it's great to have you and our viewers. You're one of our viewers' favorite guests here at Liberty and Finance. What I would like to discuss with you today is what is happening in silver. We had quite a few down days, more than 2 weeks straight of silver falling. It broke below that critical level of around 2150. Now we're seeing today silver and gold rally back a bit. What is happening in precious metals and specifically silver?
Well, as you just said, just to repeat back, they have sold off. I think silver was off 16 days in a row. I don't know if that's a record or not. Sounds like it could be. And it's the everything bubble has popped, except gold and silver really haven't been in the bubble at all. They're both very undervalued. But in any of these big sell-offs of the stock market, the metals get hammered right along with it. And the reason being is that there's a lot of leverage throughout the system, and people that hold gold positions at the professional level, like the money managers, pension funds, that type of thing, will sell off their paper gold, their ETFs, maybe their mining shares, or anything to make meet their margin calls or that kind of thing. But a lot of selling, and because both of the metals trade on a exchange that's leveraged highly in the futures markets, it's actually a different animal than the stock market. And the leverage is extreme. And because of that, there's a lot of stops. In other words, a position that's open for, let's say, $22 silver or something, and the price goes up and up. And as that happens, the holder of the contracts will set a stop limit, meaning if you hit this price, sell me out. I want to lock in my profit, or I'm willing to take this big of a loss and no more. So especially in the futures market, selling begets selling. So it tends to be extremes. In other words, the sell-off, because of the leverage, is greater than it might have been if it was a cash-only market. Having said all that, 2150 was the key, and we did breach it. And right now, as we're doing the interview, silver's up over 2%, up almost 50 cents, which on a percentage basis is about 3 or 4 times what gold is up today. The only other metal that's beating silver on a percentage basis today is palladium. I don't know if we're going to be able to say this is the bottom, Elijah. In fact, kind of doubt it. I don't know where the bottom is exactly. I know we're certainly close enough to begin to get into the metals. In other words, I wouldn't be afraid to buy here, but I wouldn't load up. I would start to what we call nibble and look at some situations. I'll be doing an update for my paid members probably later today or tomorrow. There are techniques you can use as you're nearing a bottom that are pretty favorable for risk reward, and also be able to bank some immediate cash. And I'll save that for later. I think it's similar to 2008. I just finished with the MIF, the Metals Investors Forum. I was one of the keynotes, and I explained that the sell-off looks bad, feels bad, unexpected to some. Everyone that knows gold's negatively correlated to the stock market thinks that that means as soon as stocks go down, gold goes up. That's not how it works. But I pointed out that it sold off a lot less than it did in the 2008 crisis. Silver sold off a lot less. Now, that's sort of implying this is the bottom. And again, I don't think it is, but I think it's close enough to make that summary that the metals are stronger this time in what I think is going to be a more harsh downturn than we saw in 2008.
Now, what's our next support level now that we have broken through that 2150 level? If we do fall below where we just were, what's our next support level?
$18 is really the lots of support at that level. So, it's a couple dollars from here, and I don't like to say it, but, facts are what they are, and that's the major supports at 18.
Now, as for gold, I know that it did this morning actually fall below 1800, but it seems like that's a pretty good support right there. Are there any other levels you're looking for in gold?
Yeah, 1780, and gold did get under the 200-day moving average, I'm pretty sure. And if that's true, then that portends more weakness ahead. I think the ultimate low in gold could be in the 1700s somewhere. I mean, I've heard some of the analysts that I, respect a great deal are even saying 1680. But let me just put that in a reference point, Elijah. During the 2008 crisis, we went from roughly 1050 down to 700. So we had a 30% move down in gold. And gold and silver were the first to recover. And from that bottom, gold doubled, more than doubled. And from that bottom in silver, which went from 21 down to about 9, was up fivefold. So that suggests that going forward after gold and silver catch a bid and the metals move up while the stock market's moving down, I expect actually better results than that, not like overnight, but I think you can think about what it did. And again, we're probably in a worse crisis than we were in 2008. So within that context, we're fine. So even if you take 1700 from, 2070 was the high so far. So 300 points on 2000, you're looking at what, somewhere around 15% or something along those lines. So maybe half as bad as it was during the last one. And again, this shows, in other words, they're stronger under harsher conditions, which is exactly what I would expect it to show us. So I don't think it's even a convoluted way to look at it. I think it's actually of course I'm saying this, but I think it's an accurate way to look at it. It's like, well, it's weak. Okay. How weak relative to what it did in the past? How weak relative to what it could do, et cetera. So I wish it was going straight up. I wish it was opposite the stock market right now, but that's not how markets work. And remember, major moves climb what we call the wall of worry. And there's a lot of worried precious metals investors out there, which psychologically is actually something that I'm not afraid to talk about, and I think is probably quote unquote normal, because when you have something that's the truest hedge you can have against all the financial markets or currencies, the currency war that we're having with the other nation states, there's a lot to digest. And yet gold over the longer term, silver as well, have usually proven to shine. And I think that's ahead, but not immediate.
It does seem like when we do see a stock market downturn, occasionally the precious metals will sell off, but they'll recover real quickly. You mentioned at the top of the interview that we're seeing the popping of the everything bubble. How bad do you think this crash could get? I've seen comparisons of, right before the major crash in 2008 and what we're seeing right now, and the charts look very similar for the stock market.
Yeah, that's a great question. And I'll be a bit philosophical here, but markets go from overvalued to fair value to undervalued. And right now, we probably have to cut the Dow roughly in half to be fair valued. And how can I say that? Because of the state of the markets and based on earnings. I mean, when you buy a business, you buy a business to earn. You buy a business to make a profit. So if you're in the clothing business and you buy a clothing store, I mean, every item that goes out that door should have a profit attached to it. And now you've got to pay all your costs, your capital costs, your sales force, taxes, insurance, all that stuff. So when you evaluate a business, as you should, and you buy a stock, people don't think they're buying a business. They don't evaluate what the profit and loss statement looks like. They just look at momentum mostly these days. So to get to, get to a profitable return on capital, the Dow would have to be cut in half. That's fair value. And this is a broad range. Well, David, you're wrong. The stock is already there. And I get all that. I'm talking about on aggregate. I'm taking everything together as a lump sum. So now you got to look at undervalue. So where would that be? Well, be anything other than half. So let's just use a number, Elijah, say 2/3. So if the Dow fell 66%, use a Fibonacci retracement, and it gets there, now we're undervalued. Would that be a buying point? Probably, at least a point to start getting back into longer term investing. So we have a ways to go. Now, will this happen or not? So far we're sliding off in the stock markets. The only issue I have is what I've said before, I've said it on your interview, is that if we see the Fed flip-flop and get scared, which is very likely, and start to pump even more funny money into the system, the stock market will probably be one of the first to react, which means it'll go up and up and up. And that's something that a lot of investors and people with IRAs and pension funds and all that will be very, very happy about. The problem with that is you're back into a situation like you were similar to the Weimar Republic, where the stock market keeps going higher and higher and people feel better and it looks good. But the reality is they're still losing money because the currency is devaluating faster than their gains in the stock market. And that's something I'm quite aware of. And it does bother me that it could be actually going that direction. It remains to be determined. The most ethical and moral way to do it is let the free market determine what the true value is on all this stuff. But that's not going to happen. We have a managed economy, and they're going to manage it until they can't manage it anymore. And when that takes place, we could see a lot of bifurcations with some stocks that maybe are undervalued just shoot up, and a lot of them fall down. And sooner or later, the market's going to have the final say.
So what you're saying is that we could see, maybe stocks even rise, but the value of the dollar will be falling. So if we, for example, just look at what's happening right now, if we look at a year chart of the Dow, it's down around 6%. And even if you go by the official inflation numbers above 8%, that's down 14% in purchasing power in the last year for the stock market. So if we do see inflation rising even more, just do the math. It seems like, the purchasing power of the money that you have in the stock market may be falling quite a bit.
Absolutely. Well said. I'll just back you up. One of the people that I learned from early on was James Dines. He just passed away recently. He's a founder of the Dines letter and called himself the original gold bug. But he wrote a book. One of the first he wrote was called The Invisible Crash. So what he pointed out was that the Dow Jones Industrial Average might have a bigger and bigger and bigger number. But if you look at it in terms of gold, a constant, a piece of gold is a piece of gold. In other words, an ounce of gold is always the same. And you adjusted the Dow for inflation. It was actually, I wouldn't say crashing, but it wasn't doing very well. So he called it the invisible crash. He pointed out what real money meant. He said it's a different way to measure and get a true picture. And again, it just revivifies what we're talking about. You could have a higher and higher and higher Dow, and the pension managers, everyone feels good. It feels like, okay, we're back on track, and my stocks are up, and But if you are devaluing at a faster pace than those stocks are going up, which is what happens in an inflationary depression, is you might feel good, but when you go to the store and cash out your big gains in the stock market, you get a pretty good tax bill. You pay that off, and then you also have what's left over to buy food and gasoline, and you discover that you really haven't made that big a gain. And this is very sad, but yet this is probably the more likely case. I do think there'll be, as I said earlier, examples where you could point to, well, this devalued and this increased and all that. But on aggregate, you're going to see a very distorted market going forward. And let me repeat, and I haven't said on your show, but all inflations end in deflation. Even in Zimbabwe, when you had $100 trillion note that never actually made it into circulation, The currency actually failed before those notes ever made it into the hands of the public. They didn't use it anymore. And that's a complete currency failure. I do not expect that to happen in the US dollar. But I think before we get to that point in the US dollar, we'll probably have some type of new system, or there'll be an adjustment made with the debt situation. It has to be reckoned with it one way or another.
I know last time we had you on, we were talking about central bank digital currencies, and maybe could be the new system we're headed to in the future. Did you have any updates on that, or your perspective on how this inflation spiral might end in deflation?
Yes, well, if you go back to Zimbabwe and the currency is absolutely worthless, so what do you trade with? So they'll reboot the system in that case with a new currency, new issue, I should say. In our case, with the global economy being based pretty much on the US dollar, I think there'll be a revaluation of some type. And then it could morph into a global currency. And yes, it will be central bank digital currencies that will be pushed upon the public at large, not just US, but everywhere. It might start US only to begin with, but it's a methodology to track everything. And it'll be based on a social credit score. So there will be winners and losers in that. I think the way to park on the sidelines and protect your wealth still is in the precious metals or related commodities like oil, for example. It's kind of hard to get in the oil market. You get in the futures market, but it's too risky for most people. But there are shares, companies that produce oil that are worth purchasing, even at this juncture, meaning we're over $100 a barrel oil. So how it all ends up is really, I think, more difficult, not only to try and stab at and say this is what will happen, but to believe that the powers that be that have controlled things for so long have got an easy transition over to a central bank digital currency. They may believe they have it all worked out, planned out, and all the banks under their control. But when you get to something this much of a change, this big of a dislocation, this much uncertainty, and this much, let's say, concern by the general public for the absolute authority and power of the central authorities. And so I'm talking about central banks, talking about the political structure. I'm talking about even the judicial situation. I mean, all these things are in question now. And when people don't trust the system, and that's what I'm saying, they don't trust the system at almost all levels. They don't trust it at education, health, monetary, news feeds. It's hard to push them off and say, okay, trust us now. Here's our new system. It's going to be wonderful. Well, if you're at the point where a lot of people are, you don't trust anything coming out of the mainstream or very little of it, it isn't an easy transition for them to foist on us. So there could be a lot more pushback on the new system than most people realize.
And I think being part of that pushback, I guess, because it's like we don't want our liberties taken away from us. So how do people stand up against this new system?
I think the best way is, change the currency, change the world. I got that from True Stream Media. I think it's Aaron and Melissa Dykes. If I have it right, I'll shout out to them. They do wonderful work, make some very, very good documentaries. And I believe that was their catchphrase, change the currency, change the world. I mean, basically, as I've said so many times, money is power. And with that power, you can control things. And that's how the bankers, primarily control the political class, the healthcare system, and everything that falls underneath it. So if we have the power, meaning real money, we have a lot more power. And it's almost impossible for we, the people of the world, to take over the gold market. Over half the gold is already held by the banking authorities as a reserve asset, as their go-to last resort on the place in the world where they have, gold as the money, the ultimate money. The hitching post of the monetary universe is gold, and they know it and they have it. Silver, they've blown off way back in the late 1800s. So if we, the people, took over the silver market, rather than the bullion banks that basically control the lion's share of it, we would have real power in our hands. And Is it that simple? Of course it isn't. I mean, I'm not trying to make light of the problem that we have. What I am suggesting is that you have a way out. It's nonviolent. It's easy to vote. You don't have to do it with your life savings. All you have to do is take a little bit. I recommend 10%, and I've had for years. And take that, put it into a hard asset like silver or gold or both, and just don't worry about it. If you buy the right amount, you can sleep very well at night. It's people that learn the story, understand it, understand the banking system is basically a criminal cartel and all the stuff that we've talked about for years. And they get overexcited and they say, oh, I'm going to get even with them and I'm going to do really well and I'm going to come out the other side better than ever. And they buy too much, or they buy the wrong kind, or they do it on emotion. But if just enough people came into the silver market, particularly, we would have a lot of power in our hands. And what's interesting about that comment is the Silver Institute just put out their new annual report, the World Silver Survey, and the retail market set the biggest amount of silver bought by investors in several years. It was somewhere around, I'm doing it from memory, last year it was 262 million ounces of silver was bought in the retail market last year. That's a pretty good amount. But if you take it into dollar terms, it's laughable compared to what the market cap of Tesla or Amazon or any of these FANG stocks are worth. But nonetheless, there are some smart people out there buying the precious metals.
And as we've talked about in the past, I mean, that just seems like the best way to really reclaim your liberty financially is actually holding something of real value outside of the banking system. And when they try to roll out this new system, whether it be central bank digital currencies or something else, then you have something of real value and you have something outside the system that you can say, you know, I'm not dependent on the government for any of this. I have my wealth stored right here.
Well, you did it. I mean, Elijah, back when you started and you were so young and so bright, and you still are, right? You know, and you're more experienced. You got some years behind you, which congratulations. Point I'm making is finance and liberty. There is a direct correlation between an honest financial system and the liberties that we enjoy. And again, it goes on trust. No one has to trust an ounce of gold. Yes, it can be counterfeited, but let's just move that to the side. It's very rare. But an ounce of gold is an ounce of gold. So everyone can trust it. And that's the basis of interaction between people. I mean, if you look at the biggest problems that we have in the world, really, and this may sound, it's not superficial, may sound too easy to state, but it's basically not keeping your word. I mean, if you go to the war right now, who disavowed what they said? It was the United States. It's what NATO said, you know, they would never go east of this line, and they did. And so they broke their word. And now what? You know, so, you know, there's always two sides to every coin. In fact, there's three. There's the top, the bottom, and the side. But I'm trying to be funny. But the point is, a lot of the misery that's taken place throughout the ages has been on someone reneged on their word. They didn't adhere to the contract, verbal or written. And that's very sad, because if you can't trust the other person, the other entity, the other nation state, the bank, I mean, that's how banks fail in the early days when it was gold and silver. It wasn't gold and silver's fault. It was the bank lied about how much they held. And then people got suspicious, went up to the window and said, here's my certificate, give me my gold. And, you know, number 1, 2, 3, 4, 5 got their gold, and number 6 is holding a certificate and told, we don't have the gold anymore. So that's a bit, again, of a summary that's rather a small case, but on a bigger picture, the idea of that holds.
All right. Well, David, we really appreciate your time and insights today. Before we let you go, if our viewers are interested in hearing more of your wisdom, where can they find you?
Yeah, I do at least 1 or 2 interviews a week, and that's available at my main site, which is themorganreport.com. Just pull down the blog tab, and you can watch the latest ones. You can also search. If you're interested, I've done a lot in the crypto conspiracy series. I just did another one today. And then on the About page, there is a biography, which is fine. Look at it or don't. But under the biography, there is a film called The Four Horsemen, and that's for free on the internet. And that is a good summary of the cyclical nature of empires and how money systems and empires come and go. And we are in the midst of seeing the Anglo-American Empire waning, and the Eastern nations, China, coming to the fore. And there's not much that can stop that.
All right. Once again, David, thank you so much for your time, and God bless.
God bless you. Thanks.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty in Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.